If you only watch 1 minute of financial news this week, don't watch this minute. Watch Wednesday morning at 8:30 Eastern, because that is when the April CPI number drops. And that is when we find out whether the market that we've been trading for the past month is still the market that we'll be trading on Thursday. Welcome to Invest AI Savvy, where AI powers smart investing. Welcome to Monday, May 2026. Now, here's what happened over the weekend. President Trump called the Iranian proposal to end the war totally unacceptable. The market yawned. Stock futures are barely moving. Oil is up a bit and nobody's panicking. You know why? Because everybody with a calendar can see Wednesday coming. I'm a guy who built a computer system to look at 57,000 stocks every 6 hours. My BuzzPulse system has an opinion about today. The opinion is sit tight, be very, very careful. And if you absolutely have to put money to work in the next 48 hours, here are the two names that might survive what's coming. Wednesday, let's go. All right, pre-market picture. S&P futures down 0.05%, Dow flat, NASDAQ down 0.07. Oil up 2.3%, gold down 1.2. The 10-year Treasury yield is at 4.39, up 0.73 basis points, which in the technical language of bond traders means we're all waiting for Wednesday. The VIX closed Friday at 17.2. It's not screaming, it's not even yelling. It is in what economists call normal range. No fear regime, no panic, just caution. Quick housekeeping before we go any further. This show is for educational purposes only, and it's not investment advice. I'm not your financial advisor, so you can make your own good decisions. I show you what the algorithm sees, and you decide to do with it. Is that fair? Now, where were we? Okay, right. Wednesday. Here's the thing about CPI prints. They don't just move the market, they reprice the market. A hotter than expected number on Wednesday morning will unwind rate cut expectations, reprice growth stocks, and very likely take back again every gain the semiconductor sector has made in the past week. A cooler number does the opposite, and we won't know which one we're getting until 8:30 a.m. Eastern on May 13th. Today is what we call a holding pattern day. You can trade it, but you better know that anything you buy today is a 2-day hold minimum, because Wednesday could blow it up. Signal of the day, and here's the part where I usually walk you through a beautiful 6-layer convergence setup with momentum, sentiment, social chatter, insider buying, and a clean technical picture all agreeing at the same time. Well, today's not that day. BuzzPulse looked at 57,000 stocks this morning, and it found two that are moving. Not 200, not 20, two. And neither one of them hit convergence depth 4, which is my threshold for calling something a real signal. So what I'm about to show you is not a signal of the day in the usual sense. It's a here's what's moving if you absolutely need something to watch today. Now, the first name is SOXX, SOXX. That's the iShares Semiconductor ETF. Closed Friday showing a Z-score of 6.5 with a 24-hour gain of 5.7%. That's a meaningful move for a diversified ETF, but it's not a stock. It's a basket of semiconductor companies, which means it's telling you the entire sector is catching a bid. Why? Well, probably ongoing AI infrastructure demand. Data centers need chips. Chips come from semiconductor companies. Semiconductor companies are inside SOXX. The thesis is clean. The problem, and you know there was a problem, is that SOXX is exactly the kind of name that gets repriced when the CPI comes in hot. Semiconductors are long duration growth. They live and die on interest rate expectations. A cooler print on Wednesday and SOXX keeps running. A hot print and the rate cut narrative gets unwound in front of your eyes, and semis get hit first and hardest. The 5.7% SOXX just did is the kind of move that disappears in a single 45-minute window after the 8:30 Eastern release. So if you're looking at SOXX today, you're looking at a name with a clean thesis sitting 2 days in front of the most important data print of the month. The setup is real. The timing is terrible. The second name, I don't even want to give you the ticker on this one because I want you to avoid it entirely. It's called RXT, up 56% gain in 1 day, a Z-score of 7.9. Sounds great, right? But here's the catalyst description, and I'm quoting directly. Imminent rug pull, price collapse target back to $3. The stock is at $5.49. The short interest is 20%. Under normal circumstances, that setup could be a squeeze, but when the catalyst language includes the words rug pull directly, this isn't a squeeze, it's a trap. And the short sellers are the ones with the better information. The dump pumpers are at it again. Don't be the one to get hurt. So the signal of the day, if I'm forced to name one, is SOXX, with the very loud caveat that Wednesday could take it all back. Now let's talk about the greed score top 5, because this is where it gets interesting in a please don't do this sort of a way. Number 1 on the greed list is ticker AVT. The internet has decided this stock is going up because Bitcoin is going up. That's the whole thesis. Bitcoin pumps, AVT pumps. Bitcoin sneezes, AVT catches pneumonia. There is no business reason, no earnings story, no product launch. It's a leash. And somewhere on the other end of that leash is a dog that doesn't know it's tied to anything. Could it work for a day? Sure. 2 days even. But you and I know what happens when the vibe breaks. The leash goes slack and the dog runs into traffic. Number 2 is a name called DGXX. This one already ran 73% last week, which is the part the greed list loves. Here's the part the greed list isn't telling you. Earnings drop in 3 days. CPI drops in 2. So whoever buys DGXX this morning is volunteering to hold a small cap stock through 2 of the most violent repricing events a market can throw at you back to back in the same week. I don't know who's signing up for that ride, but it isn't me. And if you're being honest with yourself, it probably shouldn't be you either. Number 3 is RXT. We already talked about that one. Rug pull waiting to happen. The short sellers know something the buyers don't. Move on. And number 4 is Lenovo, ticker LNVGY. The catalyst, and I want you to really sit with this one, is a driver update. Lenovo released a software patch, the kind of thing that pops up on your laptop at the worst possible moment and makes you click and remind me later. And somewhere on the internet, a group of people decided this is the Manhattan Project. It isn't. It's a patch. The chatter is loud. The signal is nothing. And number 5 is BURU, trading at 23 cents a share. A bull case, and I'm quoting the internet directly here, is diamond hands. That's it. That's the whole pitch. Someone with a username and an avatar is going to hold this thing forever and force a 60% squeeze through sheer willpower. I don't have to tell you what happens next. You already know. The diamond hands turn into paper hands the second the stock ticks down half a cent. The watch list tells you where to look, and the greed list tells you where the trap is. Now the portfolio check. I don't have yesterday's signal to review, and this is the honest truth. The algorithm didn't generate a high conviction signal on Friday either. We've been in this environment all weekend, and that happens. Most finance shows won't say that to you out loud. They'll manufacture a trade to fill the segment. I'm not going to lie to you about a thing I'm not sure about. Now, if you've been following the show all month and you're getting positions on, today is a day to check your position sizes. Anything you're holding that's rate sensitive, which is most growth stocks, most tech stocks, and definitely semiconductor names, is about to get a live stress test on Wednesday morning. If you're sized too big, now's the time to trim. If you're sized right, you're fine. Just don't add anything until Thursday. All right, BuzzPulse University, one concept explained from scratch. Today's concept, why convergence depth matters. BuzzPulse tracks 6 different signal types: momentum, sentiment, social chatter, fundamentals, insider activity, technical setup. Each one is a layer, and each layer is independent. When one layer lights up, that's interesting. When 2 layers agree, that's a setup. When 4 or more layers agree, that's convergence. And here's why it matters. Picture 57,000 stocks. Now narrow it to the ones with momentum. You're down to maybe 5,000. Now narrow it to the ones with positive sentiment, maybe 100. Now narrow it to the ones with rising social chatter, maybe 20. Now narrow it to ones with insider buying in the last 2 weeks. You're down to 3 stocks, maybe 2. That's convergence. It's not mystical. It's not magic. It's just 6 different data streams pointing at the same name at the same time. And when that happens, it tends to mean something. Today, nothing hits convergence depth 4. That's why today's show sounds a little different. That's why I keep saying, be careful, because when the algorithm can't find 4 layers agreeing, that tells you the market doesn't know what it thinks yet. And that is the single most important thing you can know on a day like today. Tomorrow, either one of 2 things will be true. Either SOXX holds that 5.7% gain and semiconductor strength continues into Wednesday's data print, in which case, congratulations, you caught a 2-day trade. Or Wednesday's CPI comes in hot, the rate cut narrative dies, and SOXX gives it all back by 9:45 a.m. Eastern. I'll tell you which one happened, same time tomorrow in this exact spot. The watch list tells you where to look, and the greed list tells you where the trap is. Wednesday morning, we're going to know a lot more. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.